While it wasn't the most exciting day on Wall Street, we did close in the green across the board. In fact, we hit a number of records, including an all-time closing high and an all-time intraday high on the S&P 500 itself. We also want to talk about some bullish intermediate confirmation signals that are starting to appear. And then in our trade application example tonight, I want to focus on a stock that's one of the best performing stocks in the entire S&P 500 in 2019. It's been traveling sideways for the last couple of weeks, and then today broke out to new all-time highs. So with that, let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's December 17th, 2019. First of all, if you're new, welcome aboard. Remember to go to YouTube, click subscribe. While you're over there, check out our email distribution list that you can find in the description area. Also, we're heavy users of Twitter. We appreciate those of you that engage with us on that social media platform. If you want to follow me, my handle is @BrandonVanZee. We also have a presence on Facebook. Feel free to join our group at the web address embedded in the logo in front of you. All right, with that, let's go ahead and jump into the charts. As you can see, I've got chart 4B pulled up here in front of us. As a reminder, any of you that are premium members of Market Scholars has access to our approximately 50 customized charts, including this one. So as we look at this particular chart setup here, it's the four major U.S. equity indices. The S&P 500 is in the upper left, Dow Jones is in the upper right, NASDAQ Composite lower left, and Russell 2000 lower right. And as you can see, the background colors of all of our charts are currently green, signifying that our posture that we use in this particular presentation that is developed using the intermediate term line on the market forecast technical indicator that you can find on the Thinkorswim platform is considered bullish at this time. As you can see, for much of the last 3 months, we've had more green shading on that background rather than pink, and that signifies that we've been largely bullish here for much of the last 2 months at a minimum. We had a little bit more of a disturbance there at the end of September, but really since the beginning of October to where we're at right now, nearly every trading day we had been considered to have a bullish posture. So things may not have resulted in spectacular returns here in recent sessions, but it's really just continuing that strong momentum towards the end of the year. And 2019 will go down in the history books as one of the better years on record for the stock market. So it really was a productive year for those of you that are long stocks. As it stood for today, we did have bullish movements across the board. Now, they weren't big. Notice that the S&P 500 was only up 0.03%, so it wasn't much, but that was enough to get us over our closing all-time price high yesterday that was set. In addition to that, we also hit an intraday all-time high of nearly 3,200 here on the S&P 500. Our biggest winner here today was actually the Russell 2000 small cap index, which was up 0.46%. Remember, small caps tend to start to outperform towards the end of the calendar year and into the beginning of the next calendar year. Some of that goes back to for tax purposes. But anyway, we've been seeing some strengthening in the small caps here in recent weeks, and identifying that for you. The upward momentum that we've seen has been a little bit stronger there than in some of the other areas. But keep in mind that the Russell 2000 is not at an all-time high like the other three are. So that's something to kind of park in the back of your mind. If we go back here on the Russell 2000 chart, let's go back a 3-year chart. And you can see that the high was set back here in August of 2018. You can see where we're at right now. We still have a ways to go to get there. The other three indices were just within a stone's throw of all-time highs. So anyway, things are looking pretty strong across the board. Now, one of the things I mentioned in the intro was that we have a number of what's known as bullish intermediate confirmation signals. Now, before we get started with this conversation, I will first point out that we would not consider these signals to be ideal in nature, but they do exist nonetheless, so I'm going to point them out to you. And they do exist in 3 out of our 4 charts that we're looking at here, including the S&P 500, the Dow Jones Industrial Average, and the NASDAQ Composite. Now remember, there are 2 pieces of the bullish intermediate confirmation signal. The first piece that you need to identify is whether the green line is currently considered bullish. Remember, the green line can be considered bullish as long as it's trending up between 20 and 80 or just simply in the upper reversal zone above 80. And in this case, with this strongly bullish market that we find ourselves in, the green line is in the upper reversal zone on all of those charts. So that's step number one, identify a bullish intermediate posture. Step number two is to then look to see where is that red momentum line. And if it is specifically in the lower reversal zone, as you can see, red line on the S&P 500 here has drifted a little bit below 20 here. In fact, it's at 14.88 currently. And in the case of the Dow Jones, the red line is at 15.81. And in the case of the NASDAQ Composite, the red line is at 16.81. So anyway, all three of those have the red line in the lower reversal zone, and therefore we do have formally a bullish intermediate confirmation signal. Now, the reason that I said it wasn't an ideal setup earlier was because while the blue near-term line is not technically part of the official signal, we have used it over the years to kind of gauge whether the setup is a better setup or a worse setup than normal. And typically what we've found is if the blue line resides somewhere between 50 and 20, that is a stronger kind of breathe out or exhale moment for the market to take advantage of the buy the dip mentality. And remember, that's exactly what we're looking for when we're looking for those bullish intermediate confirmation signals. We're looking for a strongly trending market that has a momentary pullback in price, and that oftentimes occurs when that red line goes down below 20. But in doing so, we also want that blue near-term line to have a healthy pullback, and that is not what we're getting right now. You can see the blue line is actually in the upper reversal zone here for the S&P 500 and the NASDAQ Composite. And you can see it's on the verge of being in the upper reversal zone there for the Dow Jones. None of those blue lines are between 50 and 20 right now. So anyway, they exist as far as the bullish intermediate confirmation signals, but they are not the idealized version of that signal. And therefore, if you are acting upon that signal, perhaps you use a smaller position sizing as a result of that understanding. Let's go ahead and now move on to our 3 green arrows chart. And we're going to look at chart 4D in this case. As you can see here, we do have 3 green arrows across the board. The background colors of these charts will signify whether we have 3 green arrows, 3 red arrows, or a mix of green and red arrows. If we have a green background color, as we do right here, we basically have a 3 green arrows signal. Now, for those of you that are not familiar with that term, 3 green arrows, we're effectively just using 3 different technical indicators and trying to determine if each of them would be considered bullish at this current time. And the 3 technical indicators that we're using are the 30-day moving average, which is this green line right up here by the price candles. And then we have the MACD histogram, which kind of judges momentum for us here in the middle. And then we have a stochastic that kind of helps us understand whether the bulls or the bears are in control of the price action by seeing where price is closing in a variety of ranges throughout time. And if all of them have a green arrow as their most recent arrow, then we would consider that to be a 3 green arrow signal. So in the case of the S&P 500, we've had the green arrow in play on the 30-day moving average going all the way back here to October. We more recently received the green arrow here on the MACD histogram here just a few sessions ago, and a couple of sessions prior to that we received a phantom green arrow there on the stochastics. And so that's why during that entire time period here for the last 4 sessions or so, we've had that green background shading to the chart in that case. So what are we looking for, or why are we trying to gauge if we have 3 green arrows or not? It just gives us a better sense of whether these are better or worse times for trend trading purposes. And when we have 3 green arrows and upward trending moving averages, it generally is a positive time to be considering trend trading on an individual stock basis. All right, let's go ahead and now tackle our longer term chart view. And this will be a chart 4C. This is our 1040 crossover method. Not a whole lot to report here. We don't spend a lot of time analyzing this because this is the least sensitive approach that we look at during these presentations as towards, different posture changes. And as you can see, the background colors on all 4 of our charts here remain green, just as they have been for the last couple of months. At that time, we had the Russell 2000 change from a bearish crossover to a bullish crossover. And specifically what we're looking at here are weekly candle charts going back over 3 years in length. And the orange line is the 10-week moving average. The blue line is the 40-week moving average. And the more sensitive line is, of course, the 10-period moving average. And when it goes up and over the less sensitive line, we consider that to be a bullish momentum type of a move. And so nothing new to report here, just basically a confirmation that things are still trending in the right direction. For those of you that are bullish on the markets, we continue to have bullish behavior and bullish postures from this longer-term methodology as well. All right, now let's go ahead and get into some 12 grid analysis, starting with chart 5A, and this will be our asset classes 12 grid. As we look at this, a reminder that the background colors of this 12 grid view is going to tell us whether we have a bullish or bearish intermediate term posture according to the market forecast technical indicator. So of course, when you see the green background, that's bullish. When you see the pink backgrounds, that's bearish. Now, there is differences in the shading. For instance, if we were to look at high yield bonds, which have been on quite the tear here recently, look at this. HYG feels like it's been up every day for the last 2 weeks, with the exception of 1 or 2 trading days along the way. But that has been a straight line up for high yield bonds. That is a strongly bullish posture right now. You can see that dark green background color right there. Whereas the chart just to the left of it, in this case foreign bonds represented by BNDX, just has that lighter green color for the background. That signifies that we do have a bullish posture, but we would consider it to be weakly bullish, not strongly bullish like we do have with the high yield bonds right there. In terms of charts that look interesting, things that I would point out in this case would be that our stock-based charts up here at the top all look fairly strong, whether we're looking at the United States in the upper left, the foreign developed stocks kind of second from the top, or the foreign emerging stocks third from the top. All of those look fairly strong and in decent sized trends right now heading into the end of the decade here as we're approaching the Christmas holiday season and New Year's and all of that. So things are robust more times than not during this time of the year. Last year obviously was an exception to that, but generally speaking around the holidays we have more bullish price behavior in the stock market, and that is what is coming through fruition here in 2019 as well. Another chart that I would point out from a bullish perspective would be down below here. Oil has really been on a nice move. Now, we haven't really seen the oil stocks dramatically outperform yet, but we've started to see little seeds planted here or there. A couple of stocks that we've reviewed in my swing trading class here at Market Scholars in recent weeks have been Halliburton and Conoco. There are a couple stock charts out there that are starting to look a little bit better. So we want to keep our eye on that area, because if and when energy does turn around from a sector perspective, there are going to be some opportunities for big outsized gains to the upside, because those stocks have been beaten up so badly over recent years. So we're going to keep our eye on that. But of course, if you want oil stocks to go up, first things first, you want oil prices to go up. And that is where we find ourselves right now. This is the chart of USO, which we use as our proxy for the price of a barrel of oil. And as you can see, we're approaching 3-month highs here and in a significant uptrend, rising above that moving average very nicely here. So keep your eye on oil. I know it's been a while since it felt like oil is relevant. In fact, one of the more interesting statistics I heard here within the last couple of months is that Saudi Aramco, the big IPO that took place over in Saudi Arabia, its market cap of that one company is worth more than the entirety of the United States energy sector, including Exxon and Chevron. I mean, it's quite remarkable if you think about it. So that just gives you a sense of how beaten up the energy area has been here in the United States. So there could be a little bit of opportunity at some point in the future under the right circumstances, and the right circumstances generally start with higher and rising oil prices. And that's kind of where we find ourselves right now. So it does have kind of the fertile breeding grounds of the potential pop of some of those oil stocks in the future. Let's go ahead and take a look at our next set of 12 grids. In this case, we're going to pop on over here to the U.S. sectors 12 grid. And this will be chart 5C for those of you that are premium members following along at home. As you can see, we only have one red chart on the board, and it's the one all the way in the lower right-hand corner. and that's lowly old real estate. Real estate has really been on the outs. In fact, we've been liquidating a few of our real estate positions in my Monday top-down trend trading class in recent weeks and months as a result of that decline that we're seeing there, and trying to replace them with areas that are doing much better, which fortunately are a number of areas. A lot of these other charts look really, really strong out here. As you can see, they are all not only green in the background color, but they're all dark green, telling us that we have strongly bullish postures across the board. What's a little bit peculiar is that oftentimes you find utilities and REITs traveling together. And while that was largely the case up until about 3 days ago, you'll notice that utilities have really surged, bouncing off of that moving average. Now they're back up at kind of a horizontal resistance area there, so we don't want to make too much of it. And this was not the best looking candle to the end of the day here as well. But it is worth noting that at least they're trying their best to be bullish at a time where it just kind of feels like real estate is just rolling over and playing dead right now. I did see that one of the bigger utility companies out there, Southern Company, ticker symbol SO, had a really nice day here today. So I'm sure that accounted for some of the performance of the utilities at large. But Southern Company was up over 2% here today and broke to new multi-month highs there. So hopefully that is a good harbinger for those of you that like utility-oriented securities. In terms of the other sectors that we see on the board here in front of us, as I mentioned before, there's no shortage of really strong-looking charts out there. I would say that the financials look really good. I would say that technology looks really good. I would say discretionary is starting to improve. We talked about that concept a few weeks ago when discretionary was slipping below the moving average here, and I was mentioning that this particular ETF, XLY, is effectively Amazon. Amazon makes up a third or more than a third of that entire ETF. So as Amazon goes, XLY goes, and vice versa. Well, Amazon's actually started to improve here more recently. You can see Amazon had a very nice day, up over 1% here today, and bounced back above that moving average there. And so I think that has allowed XLY to kind of start making its move higher as a result. I think there are a lot of other discretionary stocks that are actually doing quite well. It's just that it was being hidden to a degree by the weakness that we had been seeing in Amazon. So if Amazon starts kicking it into high gear, then that discretionary space might be a little bit of a sneaky play for bullishness. In fact, that is where our trade application example is going to come from here in the video here a little bit later tonight. Before we get to that, let me pop on over to the internet briefly. Since we're talking about sectors, remember I put together the sector selector infographic on Friday evenings. It's a two-piece infographic. This is the upper portion. The bottom portion gets into a lot more details and is available for premium members of Market Scholars, but this upper portion I do make available for everyone. And there wasn't a whole lot to report here, so I don't need to spend a lot of time on this today. You can see that healthcare, industrials, and financials, along with technology, all held their 1, 2, 3, and 4 positions from the prior week. So we did have some movements there in the middle. We did see materials stocks have a nice bounce up there. You did see, as I mentioned before, real estate starting to struggle here. So real estate finds itself all the way down there at third to last. So anyway, not a whole lot of change there during these quieter holiday sessions that we find ourselves approaching. But as always, I'll let you know if things change on that front in the future. While I'm over here on the internet, also wanted to say thank you to those of you that go out of your way to click like and retweet on these market outlook related posts on Twitter. It is a great way for David and I to get the word out about Market Scholars. So we appreciate your willingness to do that, and we feel that as long as we can get over 100 likes on our daily videos, that they are worthwhile doing. If we get less than 100 likes, then we start to question that. So as you guys can see, 107 of you took the 3 seconds out of your day to click like for us, to encourage us and to vote for us to continue to do these videos going forward. So I appreciate those of you that did that. Also, while we're over here on our website, a reminder that earlier today I taught my dividend growth investing class in the materials space. The materials sector is a little bit of a tough fit for dividend growth investing, but we did have a couple of interesting choices here today. So if you're interested in checking out our discussion in our deep dive, our head-to-head matchup there, where we put it to class vote as far as what stock we're going to buy, feel free and check that out in our trading rooms calendar here if you're a premium member. And then David taught his directional option strategy class today as well. Tomorrow, we've got our factor-based swing trading class on tap, where we've had quite the hot streak in recent months. So we'll see if we can keep that alive tomorrow with a brand new swing trading selection. And then David will be teaching his options inventory class at 2 p.m. Eastern time. So remember, we're not going to be teaching classes between Christmas and New Year's. And so for those of you that need your fix of the premium classes, this week will kind of be your last hurrah. I will be teaching them next Monday, just as a heads up, but not after next Monday. So anyway, be aware of our holiday schedule coming up, and we hope that you enjoy time with your loved ones as well. All right, let's get back on track over here with our 12 grid analysis. And let's check out what's been going on with some of the major countries around the world over here on chart 5E. All right, so as this loads up, you can see there's only one pink chart on the board, and that is Canada down below here. And note that it is a light pink shading, not a dark pink shading. So we would consider this weakly bearish, and that is it. In fact, you can see the intermediate line is at 79 and falling. So remember, the only reason it's considered bearish is because it fell out of the upper reversal zone, which is at 80. So in other words, it just barely is considered a weakly bearish posture. In fact, if EWC goes up tomorrow, it wouldn't be surprising at all to see this go right back to bullish. So it's right on the cusp of that. But you can see when you look at the price action versus its 30-day moving averages of all 12 of these charts, Canada is really the only one where you see the price action actually touching the 30-day moving average. All of these other charts you can see are well above the 30-day moving averages, and so it does make sense that the intermediate line is suggesting a little bit of a weaker posture for Canada than what we are seeing with most of these other major countries around the globe. In terms of what trends look the strongest from my perspective here, I would highlight that Russia looks pretty strong. Now remember, Russia is a very oil-heavy economy as well. So as I mentioned earlier, oil prices have been trending up recently. That might be able to support Lukoil and some of those other big oil companies that they have over in Russia and support their entire stock market index. So RSX looks pretty interesting here. We also have decent strength over here in the United Kingdom. Now that's been a little bit more wild and volatile as a result of some of the elections they've been having over there. We did have a pretty strong pullback today, but the only reason that we pulled back as strong as today is because we went up so much a couple of days ago. So if you were to kind of normalize or average out the last 3 days, you would still be looking at new multi-month highs here on the United Kingdom, and therefore the trend that was in place prior to the elections remains in place right now going forward until further notice. A lot of other charts look fine as well. India looks interesting, and France and Germany and Italy. There are no shortages of strong looking charts here, so that's a good sign for risk appetite out there in the market. Let's go ahead and take a look at the secondary 12 grid now, and these will be some of the smaller economies than these first 12, and this will be chart 5G in this case. All right, so as this pops up, you can see we only have one pink chart here as well, and in this case it's Saudi Arabia. However, we do remain above a rising moving average there in Saudi Arabia. Yeah, it's true that the trend is more sideways over the last 3 months from a price perspective compared to the others, so it does make sense where you have a little bit more bearishness there, but I wouldn't call that a terrible looking chart at the same time. I would say it's holding the line reasonably well, but perhaps on a relative basis it is a bit of an underperformer there. We have a lot of strong charts that we're looking at on this particular 12 grid as well. A lot of them that I would point out are in the bottom rung in this case. Take a look at Switzerland. Switzerland has been breaking out nicely. In fact, I identified that last week here during the presentation as well, and it's continued to go up ever since then and remains in a very strong uptrend. Argentina which I had talked about a few weeks back, from breaking out above this moving average, has continued to go up. Now, it was down a little bit here today, but it has continued to go up week over week over week for the last month. And that has created quite the opportunity there from a percentage basis. Remember, Argentina was that one that I showed you that had the big gap down that took place earlier in 2019. So this is more of a bottom fishing type of a situation here. And so far, folks that were willing to bottom fish about a month ago have to be pleased with that decision, as Argentina has shown some really strong emergence off of that moving average here in the last month. You can also see that Taiwan continues to be in a significant uptrend. Remember, that's a continuation. We've been talking about Taiwan for months at this point. This has been a beautiful looking trend. In fact, one of the most consistent trends from a foreign country perspective that we've seen in 2019. And then also Sweden looks quite strong here as well. Sweden took a little bit of time in the penalty box, just going sideways there for about a month between the middle of October to basically the beginning of December. But really here over the last week or two, we've seen a very strong bounce off that moving average, approaching new multi-month highs there on Sweden. So strength across the board for the most part, and that is a positive sign for those of you that are more bullish on stocks than bearish, which hopefully if you've been listening to these videos over time, that is the case for the vast majority of you. All right, let's go ahead and now talk about our trade application example for the day. I mentioned before it was going to come from the discretionary space, and I also mentioned in the intro that it was going to be one of the best performing stocks in the entire S&P 500 this year. I know what you're thinking. It must be some really exciting technology stock, perhaps a biotech stock that is getting a positive phase 3 announcement or something along those lines. But no, it's a boring old retailer. It's boring old Target. Target, which is a dividend aristocrat company, which those of you that have attended my dividend classes over the last 5 years should be very familiar with, as we bought it many, many times over and over again. 2019 has been an absolute dream for shareholders of Target. As you can see here, if I were to go back and take a look at a 1-year chart just to give you a sense of how much this is up, this stock has basically doubled in the last year. This was a $60 stock a year ago over here at the end of December of 2018. It's $128 right now. So a stock like Target, of all companies, doubling is not what you anticipate when you go into a year, but it is a reminder that for those of you that are long-term investors that have purchased stocks for their dividends and turned on the dividend reinvestment and tried to put the blinders onto the world, you just hit a home run with Target as a stock that's raised its dividends for nearly 50 years in a row and has really started to not only give you dividend growth, but of course strong price action in addition to that growth. Well, as you can see here, when I flip it back over to a 3-month chart now to zoom in on the candles a bit more, after we had this big move higher off of its earnings announcement back here in late November, where we had this big gap up candle that took place, you can see that people that were buying Target after the fact, right? These wouldn't have been the dividend growth investors. These would have been the people that were chasing momentum. They weren't really rewarded. They became effectively bag holders for a period of time. Now, there was not any true pain that took place. If you bought it up here at 126, the worst pain that you suffered was when it went down to 122. I think most people can handle that on a percentage basis. But it is true that during that time period, the stock market itself continued to go up. And so this one kind of went sideways at a time when the rest of the market went higher. Eventually, one of two things is going to happen when a stock goes sideways. It's either going to break up or it's going to break down. Today, we finally got our first indication that perhaps it wants to break up. And the reason I say that is you can see we now have the high label transitioning over to this most recent candle, today's candle, as opposed to where it was previously over here on the candle on November 22nd. And so we do have not only an intraday all-time high, but you could also call this an all-time closing high for Target here today as well. So with us having holidays coming up, of course, that's going to affect Target and its shoppers, and hopefully it's doing brisk business there. But in addition to that, when you have the holiday season coming up like we do, we're going to have a couple of more days off where the stock market is not open. And that means free days of theta for those of you that are option sellers that are out there as well. And so I thought what we would do here today in the case of Target is look at a bull put spread. Now you can see the one that I pulled up down below here. We're looking at the January monthly contracts, so the ones with 31 days left until expiration. So that's going to include those freebie days of Christmas and New Year's Day. That would normally be trading days, but the market won't be open. So those are free days of theta there. And we get $1.15 of credit for this. Now, when we do a $5 wide like we're doing here, we're selling the 125 put, we're buying the 120 put. So for those of you that are newer to this trading strategy, what we want to occur is for target to stay above 125 between now and January expiration in 31 days. Now, what we try to strive for is a 30% return on risk on these, and you can see our credit is $1.15. If you click confirm and send once, it'll tell you right here what your max profit is versus your max loss. You divide those two numbers into one another to determine your return on risk. So let's take 115 and divide it by 385, and you can see that it's right at that 30% return on risk if we're willing to take this trade. And you can also see that our break even on this trade is 123.85 after you factor in the credit. So as long as you think target stays above that number for the next 30 days, then perhaps this is a trade that you can make some money off of. All right, let's go ahead and send that in, and we'll see if we can get filled first thing in the morning. All right, well, thank you for joining me here yet again. Lovely day in the market, new all-time highs for the S&P 500. It seems like things continue to just hum right along, even if they aren't spectacular returns. But so far, the coast is clear, and we continue to go into the end of the year with a bullish mindset. So with that, I want to wish you all the best of luck with your trades. Remember to go over to Twitter and click like for me if you got any value out of tonight's video, and we'll see you all tomorrow. Take care, everybody. Bye-bye.